Well, yeah, we should be live.
8, 7, 6, 5, 4.
Oh, I'm so glad it skipped the bar. I was learning so slow.
Should be live.
8. Cool. But you just got to minimize that window that's in the back. It should have like created a pop-up for the YouTube and then just close it.
What, I can just close the pop-up?
Yeah. And it'll stay live.
Okay, all right then. So as long as I'm host, it will stay live basically.
Yeah.
Oh god, it's a lot of pressure, man. My Mac, the battery issue is scaring me, but it's cool.
Wait, actually, try, make me co-host.
Yep. Yep, done.
Okay, and then
see
if it lets you make me host.
Should I do that now?
Yeah, let's try it. Let's risk it for a biscuit.
This guy.
Sorry, guys, we're just experimenting with ways that you can log into the live YouTube. Yeah, and we're still live.
All right then.
We learned something new.
There you go. All right. Okay,
hey guys. So we would not recommend risking it for a biscuit. It's not always worth it to do that. You may have seen this website. This is our company website, and on that website, you may have seen that we have a disclaimer. And the disclaimer starts like this: all content is for education, information, and entertainment purposes only, and should not be considered as an investment advice or recommendation to buy, sell, hold any assets, or place any trades, because we ain't got a clue what we're talking about. We're just here to entertain and make you laugh. If by chance you happen to make 500, 600, 800, or even 1,000% returns off some of the information we provided you in previous shows or in this show, or if by chance things that we say are going to happen in the market end up happening, like, for example, BlackRock getting into crypto and then partnering with Coinbase, what are the chances? It is very important to do your own analysis before making an investment, which should be based on your own individual circumstances. You should always take independent professional advice from a professional advisor. Now, I'm not a professional advisor. Is anyone on this call a financial advisor? If you are a financial advisor, please speak now or forever hold your peace. Peace. There we go. No one's a financial advisor. So independently research and verify all information you may find on our show that you wish to rely upon, whether you wish to make an investment decision or otherwise. All investment comes with risk. Please do your own research. We are not financial advisors, do not intend to be perceived or received as financial advisors. However, we are actually quite lucky, and we're actually working with not one, but not two, but several accredited financial advisors. So that's that. Let's get into the juice. So I want to start off today's episode with a very, very interesting thing. I want to start off with getting everybody to watch this short video on something called fractional reserve banking. Now, it might not make sense at the start, but as we go through, you're going to be like, this makes so much sense of everything Michael said on this episode. So let's just start off.
Banks are allowed to create money through a system called fractional reserve banking. Whenever you deposit money, the bank is legally required to keep a certain percentage of it somewhere safe, but can lend everything else. Here's an example based on a 10% reserve requirement. John goes to his bank and deposits $1,000. John's bank keeps $100 and lends the remaining $900 to Mike. There is now $1,900 in the financial system. John's $1,000 deposit and Mike's $900 loan. Next, Mike uses the $900 to buy a laptop from Karen. Then Karen deposits her $900 at another bank. The bank keeps 10% and lends the remaining $810 to George. There is now $2,710 in the system. John's $1,000 deposit, Karen's $900 deposit, and George's $810 loan. This goes on and on until John's initial $1,000 is turned into approximately $10,000. Believe it or not, commercial banks actually create more money than central banks.
Right. So watching that, you probably notice this sounds a bit Ponzi scheme-ish. But, you know, if you're the Federal Reserve and you're a central bank or you're a commercial bank, you're allowed to do what you want. So can anybody point out the flaws in this system? Type in chat or unmute your mic if you can think of a flaw of this central bank, of this fractional reserve banking system. What's the problem with taking £1,000 of someone's money and loaning £900 out of it, and then taking that £900 and then keeping 100 of that, and then loaning 800 of that out. What's the problem? Devon, you got an answer?
Like no one can like take out like all the same amount of money at the same time.
Yep. Nobody can take out all of their money at the same time. This is what's known as a run on the bank. Now, the reason I'm mentioning this is because I don't know if you heard or if you've seen, but there's some very interesting stuff happening in China right now. Now, China's real estate market is worth billions, as we can imagine, and it was scaling at crazy, crazy heights. I was going to do the whole episode on this, but I'm going to keep doing more research into it. But it got to the point whereby people were paying for deposits on houses that weren't even built yet. And then they were using the fractional reserve system to use those deposits to get permission to build new things, even though they hadn't built the initial thing. And they've done that and done that and done that and done that and done that. And now there's some stats which I'm gathering together for the next episode that show how much buildings haven't actually been built. And it's around 20% of them haven't been built, which is a bit of a problem. So then what's happened is a few Chinese individuals have protested, and then the Chinese government sent tanks to people's houses and to banks where people were protesting. And then the protests kind of spread like wildfire all around China. So here's the problem with that. Like how if America catches a cold, if America sneezes, the world catches a cold. If China has a problem with real estate and China's real estate falls down, it's just a set of dominoes, because the Chinese own a massive portion of real estate in pretty much every country in the world. So if their house of cards falls down because it was built on pretty much a Ponzi scheme, then that's going to have ricochets around the world. And that's going to be a lot of Chinese money that's going to get pulled out of property in the trillions potentially and have nowhere to go. So this brings me on to the next thing that I wanted to share and show in today's news and just updates and education. Let's just map the migration of millionaires that are leaving countries. So we can see, quite interestingly, loads of millionaires are leaving Russia. 15,000 millionaires have left Russia in 2022. 10,000 millionaires have left China in 2022. Hong Kong, 3,000. Ukraine, 2,800. UK, quite interestingly, 1,500 millionaires left. And Ninja's hometown of Indonesia, 600 millionaires have left. India, 8,000 millionaires have left. Saudi Arabia, 600 millionaires have left. And if you're looking at where the money is flowing and where the money is going, by coincidence, it seems to be in places that are quite pro-crypto. Singapore, Canada, Switzerland, Portugal, Israel, and the UAE. Now, being as those places are quite pro-crypto and all this money is leaving, if there is a massive real estate crash that then causes a real estate crash in Canada and in America and in the UK, where do we think people are going to put that money? Well, it's a great question, because I tweeted about this the other day, just trying to, stir some interest up from the Chinese government. And where is it? Here we go. So with all this new China buzz, as I'm seeing, it's a great move by China to take down global centralized finance, because this would mean that the 2008 situation would happen all over again and nobody would trust commercial banks again. And what that would do is push more people into what? Crypto. And more people, then what would happen is the Chinese government could then go, oh, well, we're going to print this new digital currency that we're going to allow for anyone that lost their money in real estate to claim it back as long as they use our central bank digital currency. anywhere in the world. That would essentially put China as a central reserve currency. But who knows? That's just theory. It might happen. It might not happen. But, you know, who knows? It's just a theory. More news on that stuff is something that's also related to the China situation that I think is important to share, is the world's largest container shipping companies. So as we know, container shipping companies pretty much are one of the most essential parts of globalization and of the world moving. Now, if these bad boys don't move, well, MERG, great investment, obviously, because their revenue went up by 55%. Not necessarily a great investment now because we haven't done the research. We may show you later on at the end of this episode how we can research a MERG earnings and see if it is a good investment. But the point I'm going to make here is MERG is number one. Number two is MSC. And just look at the scale of the units, the amount of units that they can move. So MERG has 718 ships with the equivalent size of a football field for scale, and the average container ship has a capacity of almost 10,000 TEUs. Now, what is a TEU? Capacity is measured in TEUs, 20-foot equivalent units. So they can have, each ship can have 10,000 20-foot units on it, and they've got 718 ships shipping goods all around the world. Number two is this one here, MSC, and they've got 606 ships. Then we've got a little bit lower, this French one, CMA CGM. You might not have seen them on the road, 3.2M. Then you've got Costco Shipping. You might have seen them. They're a Chinese company. These have got 497 ships. Hapag-Lloyd, you've definitely seen these on the motorway or about. One, you may not have seen these because these are more in Asia. This is where it gets interesting. Evergreen, Yangming, and Wanhai are all in what area? Oh, yeah, Taiwan. So Taiwan indirectly has quite a substantial amount of the shipping kind of like real estate, the shipping lanes and the distribution across Asia. So very interesting that. Visualizing layoffs, I'm not going to do that one. This is the one that we are going to discuss still. So this is the Q2 growth figures that will make or break a recession. So obviously the meaning of the word recession has been changed because the Fed decided that they were going to change what a recession means. Those of you that didn't know, a recession normally begins with an economy experiencing 2 negative quarters of a negative GDP growth. And the Fed said that it wasn't negative despite the markets being in the worst position that they've been in since COVID. But, you know, okay, we're all crazy, right? We're all crazy. And we're all seeing things, and inflation isn't real. And people have got more jobs than ever, apparently, according to them. But yes, last week we explained why people might have more jobs than ever and why there might be more job creation, because there's more 0-hour contracts and there is more people working from home. So the Fed may have made a mistake there. And this is the key, because at the moment, the imports have actually risen, but the exports haven't. What is the key for making money? It's not necessarily importing, because that probably means you're spending money. Exporting means you're probably making money because you're selling your goods to other people in other countries. So if the exports haven't got back to 2019, 2018, or even 2017 levels, and you're saying we're not in a recession, but the imports have gone up, that means clearly your country is spending more than they're making. And then just another little bit of a sign about the housing market. The housing boom is under a bit of pressure at the moment because, as we can see, that's dipping. But yet the fixed year mortgage rates are going up, and inflation, as we can see, is definitely going up. And they're claiming inflation is 9 to 10% over the last 12 years. But we all know, when I was at this festival this weekend, I want people to type in chat how much they think 4 cans of beer were. Type in chat how much you think 4 cans of beer was at a festival.
30 quid.
Close, actually. It's actually £26.
Holy shit. What up, Michael?
What up, broski? What up, what up, what up, what up? So we're just going over some news and updates in regards to Wagwan with the Fed.
Yeah, I saw you guys on Coinbase. I'm like, yeah, I managed to. I sent you a message. You got it?
Oh no, I've not even gone over that yet.
Oh, I figured it out how to move the money.
Oh, amazing. Good. That's amazing. Yeah, we'll talk about that after. So that's the one there. The one that I just missed, you might have just missed there, Maestro, is about all the millionaires leaving Russia and China and how China's real estate is about to collapse.
Yep.
So that's that there. So let's now start taking a dive into Coinbase. So one of the things that we heard announced, that you may have seen us announce and talk about in previous episodes of the game, all the way back in February, 19 weeks ago, we were discussing, so we discussed it in February, and then we discussed it 19 weeks ago again about how BlackRock were getting into trading through the Aladdin platform. And I think I'll put some notes on here of who uses the Aladdin platform through BlackRock. Oh yeah, the Japanese government, Apple, and Google use it to buy stocks in other companies and for their foreign exchange. They're now going to be using Coinbase with the Aladdin platform through BlackRock. That's 20 trillion worth of assets that are now going to be, let's say, for example, even 10% of that becomes crypto. That's 2 billion pouring into crypto. Now, unfortunately, this does mean that pretty much crypto is officially no longer decentralized. So this decentralized dream is now officially over. They've taken the decentralized dream out in the back garden and shot it in the head. So anyone that thinks that crypto is still decentralized, that is now pretty much over. So let's have a look who's invested in Coinbase. So here on Whale Wisdom, we can look into the holdings, and we see Brian Armstrong's got the highest amount with 22% ownership of the company. Then we've got the other CEO there, Andreessen Horowitz, who we always talk about, A16Z. They've got 8%. Sumitomo Mitsui Trust Holdings have got 3.9%. And then we've got Vanguard with 6%, BlackRock with 3%, and Renaissance as well. Now, what's interesting to know is Vanguard were always in it. BlackRock weren't. BlackRock, as we can see, when we look at how much of their shares they quarter first owned. This is trying to say that they first owned it in 2021. That is not correct. However, what is interesting is it now, this website never used to do that. It shows the price, the estimated average price that these whales bought in. So we can see Vanguard and BlackRock is estimated that they bought in at 196 and 160. So let's just put it this way. Let's go and look at the chart and ask ourselves, do we expect BlackRock and Vanguard to stay at a loss if they bought it at 190 and 160, especially if they're using the Aladdin platform and pushing all their crypto through it? I don't think so. Now, bear in mind, when we were talking about this, literally 2-3 weeks ago, we went over the stocks to buy during the dip. We did say Coinbase. I bought more Coinbase stock and I've made it public. I bought more Coinbase stock at $40. IPO price was like, what, 180 or something like that. So let's go to it.
Yeah, you got a steal, bro. I jumped in when it came out.
Yep. As soon as Coinbase came out, I bought it. Why? Because we've been reading these portfolios for a hot minute, and we've been understanding what these guys are really up to. These guys ain't playing. And now that they've got this Coinbase, this BlackRock deal, look, yeah, this launched at 350. This was the buy zone that we suggested, and look who bought at that buy zone. As we've just seen in Q1, Q2, BlackRock and Vanguard bought exactly when we were buying.
Hold up, bro. You meant to be sharing your screen. Can't see it currently.
My bad, my bad. I hate when I do that. I'm gonna get gassed and show gold.
Yeah.
Look,
Yeah, we
BlackRock
can see it now,
Vanguard
bro.
decided to buy in our buying zone. Right here. Now, on top of this, now it came all the way down here. We bought because look how far below IPO this is when these guys have got 3,000 institutions using their platform. Guess what? Now that they've got BlackRock, guess how many institutions they've got using the platform now? 30,000 institutions across the world now use Coinbase. Say no more. Just do the maths. Do the maths. Remember the amount of assets that they hold on this platform. Oh yeah, can we check that? Yes, that's what we're going to do in this episode. But before we do that, let's go and look at, now that that 20 trillion is there, what tokens are Coinbase invested in? Let's have a look. Bitcoin, Ethereum, Polygon, Uniswap, Near Protocol, Flow, The Graph, Mina, Arweave, Compound, Reserve, Audius, Terra Classic, which is quite interesting, Rarible, and then down here at the bottom, this is all the low cap gems. So you might want to do your own research on the bottom 10 here. Compound, Uni, Instadap, Nios, Finance, Notional Finance, Unlock Protocol, Relevant,
Oh, 1
Smart.
second, bro. Are you on a different tab?
Yeah, has it stopped sharing my screen again?
Yeah, you only share tabs, so you got to reshare when you move to a different tab.
There we go.
There you go, yeah.
Now, some of these, you may see that we've mentioned them on previous episodes, or even done whole deep dive episodes into them, like Arweave, like Mina, like Audius, like Flow, like Uniswap, like Polygon. But you know, let's see.
We're too hard. We're too hard.
Let's see if, because if we're wrong, that means Coinbase is wrong. If Coinbase is wrong, that means BlackRock's wrong.
And then I don't know anymore.
And I don't really know Coinbase to be wrong that often, to be honest with you. So let's see on that. So let's just take a quick dive into this. So again, if you want to know how to find an earnings report, it's super simple. All you do is you type in the name of the company, like so, and type in investors relations. Is it showing my screen again?
Yeah, it's showing, yeah.
Yep, cool. So there's been loads of other YouTubers, and I love Ian Dunlap. You know I love Ian Dunlap. But I'm gonna put it out there. He wasn't really backing Coinbase too tough. We was. Even when we interviewed him, we were backing it. You'll see it. It's documented. We were straight on it. We were sharing the facts about what we'd read in the earnings reports. Now, again, let's have a look. Where is it? There we go. Let's do this. You want the deck? Where's the deck? Shareholder letter. Boom. Okay, so we're not going to spend all day on this. We're just going to look at the facts, the big boy facts that are there for us all to see. So straight away, they talk about their revenue making. They got the Coinbase retail app, Coinbase Prime, Coinbase staking, Coinbase Cloud, which we mentioned before, which is the Bison protocol. Now, if you don't know what the Bison protocol is, I'll quickly explain it. This is when we knew Coinbase were on crud. They bought a company called Bison Protocol that allows you to stake and manage nodes on a cloud system for institutions. Nodes management for institutions. Coinbase had 3,000 institutions. BlackRock has 30,000 institutions. Are they going to make money through this? I wonder what products are going to be proof of stake and need node management for 30,000 institutions. Maybe you'll find out later on in today's episode. So in terms of the key numbers, look, we can see even in a crazy bear market, the monthly transacting users hasn't actually dipped that much, from 8.8 this time last year to 9.0 million this year. That's not that bad. Now, the trading volume, yes, that took a massive hit. It went down from 462 billion to 217 billion. But again, you got to understand these numbers. They're not saying million, they're saying billion. And then what you got to also remember is the amount of assets on the platform. These guys got 96 billion of assets on the platform. Like, I'm sorry, but anyone that ever thought that Coinbase was going to go to zero, how are you going to zero if you got 96 billion assets on the platform?
I'm not going to lie though, sorry to interject, Binance really done a doodle on them in terms of their trading volume, at almost 30 trillion in one year.
Yeah. That's for the whole year, and that's Binance. Binance is a different kettle of fish, because Binance has got a secret weapon. They've got their own coin, so it's a bit different. But yeah, obviously, if you could invest in Binance on the stock market, I would. Well, you can't at the moment. So the key numbers we're looking for whenever you're looking at an earnings report, you want to see how their assets are. You want to see how their liabilities are. We just seen their assets are nice. And are they going to get more assets now that they're working with BlackRock? Yeah. Net revenue, the key thing to look at. Yes, this took a mad hit. I'm not going to lie. That would scare me. But it would scare me, and I would probably get out of this investment if they took a net income loss for 3 quarters in a row. So if they take a loss for another quarter, then I'm going to start getting worried. If I wasn't looking at their earnings reports, and if they hadn't got a partnership with BlackRock, and if BlackRock and Vanguard weren't both invested. But being as they are now, yeah, they've got a kind of bit of a different backing. So let's this is compared to the Q2 outlook, but the most important bit is the facts that they put in just here. Let's just read this, and you tell me if this sounds like a product or a company that's going to zero anytime soon. Verified users went from 36 million to 103 million. It tripled. Monthly transacting users have grown 6x from 1.5 million to 9 million. Total quarterly trading volume increased 8x from 28 billion to 217 billion. Assets on the platform increased 4x from 26 billion to 96 billion. We've expanded on our products. Subscriptions and services went up 18% of the net revenue. Phone and messaging support accounts for 70% of customers. Look, they more than doubled their institutional customer base to 14,500 in Q2 compared to Q2 20 when they had 1,500. Before BlackRock, they've had 14,500 institutional customers. Anyone that can go from 1,500 institutional customers to 14,500 institutional customers, yo, they ain't playing. They ain't going nowhere. Hopefully, from those numbers that I just read to you, like, there is no company on the planet doing these kind of numbers, period. Like, so now what we're going to do is we're just going to scroll down and we're going to look at where the money is coming from. We want to understand how the institutions are playing with Coinbase at the moment. So we'll skip down past the profitability. So their aim is to bring 100 million users to the platform, maintain our position as number 1 custodian, becoming the leading institutional prime broker. That's their goal. I think they can do that. Product momentum. Let's keep going down. Enhance customer support, improving overall ease of use. Coinbase Prime. Aha, here we go. In early August, we were proud to announce a partnership with BlackRock, the world's largest asset management, to provide institutional clients of Aladdin, BlackRock's end-to-end investment management platform, with direct access to crypto through connectivity with Coinbase Prime. Coinbase Prime will provide crypto trading, custody, prime brokerage, and reporting capabilities to Aladdin's institutional client base. Basically, the data that BlackRock now has on the entire crypto space is disgusting. In Q2, we launched our first regulated derivatives offering, the Nano Bitcoin futures contract, which is interesting. So look out for that. Not much on the staking. We'll come to that later or in a different episode. So developer products. We also started testing our Coinbase Pay product in Q2. Coinbase Pay helps Web3 apps access fiat rails across many geographies. Investment building. I hope you're understanding what this is. This is basically them saying they're getting into allowing people to pay in crypto or in fiat that gets converted to crypto. Before, we were helping people through Coinbase accept crypto payments, but now they're saying that they're going to help businesses, and I wonder if they've got access to businesses. Oh yeah, they have. They've got access to 15,000 businesses plus the 30,000 from BlackRock that they can now help accept fiat payments that then get converted into crypto payments. Yeah. Oh yeah, and then they did a partnership with Instagram for their NFTs and Coinbase wallet. So I don't know if this is looking like a good company to you. And then also they own USDC. Well, you know, it's kind of important. Sorry, this isn't me taking shots at Ian. This is just like, I'd love to have a conversation with him about it again.
I feel you. Yeah, we probably will, bro. Yeah, man.
But yeah, I'm gonna leave it there before this turns into people think that we got beef. We ain't got beef.
Yeah, man. No, ban that, bro. It's all love. It's always love, especially with Ian.
Yeah, man. So yeah, I'm gonna hand over to you, broski.
Yeah.
Talk about ETH 2.0.
Yeah, bro. First, you gotta make me co-host, so I can share my screen. But yeah, guys, some really interesting news came out of recent, and that's all to do with ETH 2.0. I got quite a bit of things to run through. So let's just get this going. So I went and made another presentation because why not? Yeah,
why not? It's blockchain sensei. It's what we do.
Exactly.
Please.
Right. So yeah, let's get into it. ETH 2.0, the biggest blockchain upgrade in history currently, so far, right? So I want to start off with what is proof of work, because I believe understanding the difference between proof of work and proof of stake, I know it's super basic, but I think it's very important to sort of have that premise and understanding. So proof of work takes a lot of computing power. That's one of the issues with it. So it first got introduced in 1993, called proof of, and it got called proof of work in 1997. So Mr. Satoshi, the creator of Bitcoin, then used it and utilized that technology in 2009, where when Bitcoin was created, and they used and utilized the proof of work to generate and reach consensus within their network. What is consensus? Consensus is basically a generalized agreement. So they basically utilize the technology to allow the users within their network to have a generalized agreement, basically. And that basically was used to create and secure the network within Bitcoin, the blockchain of Bitcoin. So what is proof of work? They basically are computers that fight to solve cryptographic puzzles. And the problem is that the reward goes to the first one to solve the puzzle, right? So as you can see, the miner is using up a lot of electricity and he's got a lot of power that he's using running through. So proof of work, which isn't the most effective, as I've already described, as you can imagine as well. It's created a craze of mining farms, and rigs, which is basically people that have set up a warehouse or a location and run a ton of different computers to create and generate these rewards for validating the blocks and solving these cryptographic problems. But the Bitcoin consumption index is, well, at the point of this, well, in this blog was what's it, 54 terawatts of electricity, which is enough to power 5 million US homes. Yeah. From the reports that we've read, we've come to the understanding that the power that is used for tumble dryers is actually worse than Bitcoin mining. But that's a whole nother conversation. But basically, the higher the hash rate, the higher the chance to make the next block and increase the mining rewards. So mining pools are made where they share rewards and distribute their hash power together, which is basically heavily centralized. So let's say I got a mining company, I got my own warehouse, Michael has his own warehouse. He would then be like, you know what, let's work together, let's share the rewards and just put all of our power together, which is heavily centralized. But I wanted to show a good little example of current data.
Random question. Do we reckon that BlackRock have any indirect or direct exposure to mining companies?
Yeah, without a doubt, because they basically, what happens with Bitcoin mining companies, they generate and create Bitcoin, and they basically utilize as little power as possible, and they basically try to make it as efficient as possible, and they make their expenditures as minimal as possible. And with all of the extra income that they generate, they then go and purchase more Bitcoin. So they have a very long-term perspective, Bitcoin miners, and basically 93% of all Bitcoin is held by the miners. So Bitcoin is heavily centralized because what happens is somewhat decentralized in a sense of the companies, they go public, so they make an IPO, they turn into a stock, etc. People now are able to invest in that. They use the money to expand and also buy more Bitcoin long term to add it onto their balance sheet, which basically goes to show that the demand is extremely large and they are basically hodling for the long term.
Can I just quickly share my screen? So I just want to show.
Yeah, bro, go ahead.
This
but yeah,
kind of information that gets you shot. But you know what? We'll do it.
brother, be careful, man. Be careful, my brother. We do this too much, you know.
Look at this. Vanguard have 47 million worth of shares, and BlackRock have 34 million worth of shares. And guess what company this is? Oh yeah, Riot Blockchain, the blockchain mining company in America. Look at that. What are the chances? What are the chances?
What are the chances,
Oh,
right?
and when did they do that? Oh yeah, in 2017.
Yeah, so all of the banks got involved in crypto in 2015, and the institutions follow a little bit later. Yeah.
17.
Yeah, interesting, man.
Yeah, I'll stop sharing.
So yeah, let me get back to sharing my screen. So the data that I found from that blog was that it was around about 54 trillion, which is around about here. Terawatts, sorry. And it's around about 200 now. So if 54 was 5 million homes in America and certain power reserves for certain countries, this is somewhat quadrupled. So you know, that's about 20 million homes in America. And you
wait. You remember when we looked into, I think it was a company called BlackRock, and they were doing this whole what was it called? The energy thing.
Oh yeah, the ESG compliance.
Oh yeah, the ESG compliance.
I remember that one.
And now they're invested. They have an investment in a very ESG friendly mining company.
Funny enough,
that's not an issue.
They sent that letter out to all of their majority holdings. So pretty much every company in the world, all of the major companies, giving them little letters telling them that they can't invest in Bitcoin, but they can. Incredible, right? Wow, very interesting, that one, right?
It's mad that.
Yeah, it's mad, isn't it? So let me get back into this. Sorry if I have to run through all the presentations again.
No, it's fine.
Oh, we're here. Oh, nice. That's great. So, yeah, the higher the hash rate, the higher chance you get to make the next block, increasing the mining rewards. So you get rewarded in fees. Let's have a look at proof of stake. So proof of stake is another model. There are more models than just proof of work and proof of stake. Incredible different blockchains have great different models. One is that's very interesting is Avalanche, and look into Phantom as well. Phantom is interesting. But yeah, proof of stake. What is proof of stake? Proof of stake has no miners, but instead has validators. So it allows you to mint or forge new blocks. So to become a validator, a node has to deposit an amount of coins into the network as a stake. This is like a security deposit.
So would that be really good if like the market crashed and then I wanted to become a node and I was an institution? I would do what I can to like encourage the market to crash so I can buy that asset really cheap and then stake.
We're gonna get into that later. There's more.
Okay.
It gets even more sticky. When you see the gold Ethereum logo, that's when it gets sticky. All right.
Okay.
But yeah, so it's basically like a security deposit. They lock up these funds, and the larger the stake, it allows for a higher chance to become the next validator. So the more you put down, the more you make, which is actually more. It's not really fair. It's more fair than proof of work, but it allows, you know, the ones with the big bucks to have the power, right? Which isn't great. That's a downside of proof of stake.
So if you had like 20 trillion of assets, you could pretty much like own the whole network.
Yes, quite literally. So if a node is chosen to validate the next block, it will check if all transactions are valid and then add that block to the blockchain, quite simply.
So wait. Let's just highlight that again. So if you had $20 trillion and you then used a portion of that to become a majority node in the proof of stake system, you could control what transactions and what things happen and don't happen.
Yeah, you basically validate the transaction, so you can control what comes through pretty much. Yeah, so the role of a validator is basically to check each block. So what they do is they check the transactions on the block and then allow it to pass through. So if the transaction on the block is not valid, then the person who's actually validated the block gets basically like a sanction where they get what part of their stake gets taken away from them, which is more than what they would actually get as a reward. So that is what is secure about the proof of stake model, because it incentivizes you to actually validate the blocks correctly. And when you do it incorrectly, you get terrible repercussions. So with Ethereum 2.0, let's get into it. Ethereum 2.0 is basically a merger. Currently, Ethereum is proof of work, and it's moving to proof of stake, right? So what is Ethereum 2.0? Ethereum has done a breakout of recent as well. I'm going to jump in on that just real quick as well. So if we look at ETH, you know, it done the dumpity dump, and now it's done the little run up back to this zone here, this area. And it has quite a lot of barriers to break through, as you can see, to push up and through, but it's gone right to this point, which is quite interesting for me. But if you look at that from down here,
that's where everyone's stops would have been, though, isn't it?
Yeah. So that's about a 92% raise. I haven't gone all the way to the top of that wick, but roughly. And then
in a month,
Ethereum Classic done a great run as well. So if you look at this one here, that is like 200%. So Ethereum Classic done 200%. Why do you think that is? Because Ethereum Classic is proof of work, guys. So all of the miners that are mining are going to have to move to the proof of work Ethereum, which is Ethereum Classic. So the people that have the mining rigs and are running them and have their farms, they would now have to move to Ethereum Classic.
So I can be with.
Karen.
Yeah. Okay. So yeah, let's get back into this.
We'll be able to just press play again. Yeah.
Bro, I'm scared, man. All right, there you go. Cool. Yeah, they recently done a breakout, and it went out of a range that it's been in a long time. So institutions are waiting for it to be the right time to flood in and buy Ethereum before the merge. But basically, a lot of people, what they are doing, they are basically trying to flood in before the merge and also trade on a short-term play. But I believe that the long-term play is important to understand, as there's going to be a lot of liquidity getting locked into Ethereum. I'm going to get into sort of the repercussions and sort of what I think will happen over the period and the short-term and long-term effects of what will happen with Ethereum 2.0. So the price is a function of supply and demand. So the greater demand than supply, which will be predictable through on-chain data. Ethereum is a digitally scarce asset, and a small amount is on the market and being released every day, right? So we know that there's a certain limited supply and there's a very small amount that's being released every day. So post-merge, there will be less Ethereum on the market, and on an everyday basis, monthly basis, yearly basis, a lot less. And I'm going to get a little bit into that in a little bit. So the biggest is, what is Ethereum 2.0? It's the biggest network upgrade in its entire history. So with a target date of September 19th, which is the date that they've released. So the board of Ethereum. So Ethereum is basically created by a board and like a group of different developers. So it's completely decentralized, because you can become a developer on Ethereum and sort of create your own group and be within this, be within the ecosystem and sort of push and bring these technologies forward and improve Ethereum. So it's completely open source, which I think is incredible. I met quite a wide range of different Ethereum developers, and yeah, they're very unique individuals, and I believe that they know exactly what's happening with Ethereum, and they know that they're in an incredible position. That's sort of the energy I got from a lot of people that I've met at Ethereum events. But yeah, using proof of work blockchain currently, Ethereum will have a new blockchain running proof of stake, which will be a merge, merging into one, creating a negative issuance asset or a deflationary asset, right? So this is basically a yield-bearing asset that is natively staking on the network. So ETH is going to basically do a run and wake up over the long term because of this. So this is a resource I'm going to go to right now, just so that we can see. So ultrasound money. So this is somewhat of a simulation of what will happen with the merge. So this is the amount of ETH coming out a year. Currently, as you can see, there's 5.5 million coming out, and the burn rate is only 0.5 million. So there's a lot more than what is being burnt, right? So if you simulate the merge, look at the difference. So the issuance will be 0.6 million a year, and the burn rate will stay the same.
Switch that back again, please.
Bro. So, and this is the supply growth as well. So that's 4.1% a year, right? And after the merge, 0.1% a year, right?
So no supply.
There's gonna be little to no Ethereum coming out, bro, because of this. It gets more interesting, right? So yeah, it gets more interesting. Let's get into the golden Bitcoin. I mean the golden Ethereum. It gets a bit more interesting, guys. So yeah, that's why. And now let's get into the golden Ethereum, right? So what is their secret weapon? The secret yield weapon. That's what I called it. Similar to the Bitcoin halving, it will have a triple halving.
What?
So yes, bro, Ethereum will have a triple halving, bro. in one time. So imagine a Bitcoin halving. So what is a Bitcoin halving? So for Bitcoin, computers that run a network, they get paid by fees, and they also get paid by block rewards, right? So once every 4 years, the block rewards are halved, which makes an impact on the price of Bitcoin as long as the demand is still there, right? As we explained earlier with what's happening with the miners, the demand is insane. And in about 5 years, within about 5 years, Bitcoin is projected to be around about 250K. So, and within the space of 8 to 10 years, it's projected to hit over $1 million for one Bitcoin. So these are the projections. So said by Mr. Michael Saylor, Bitcoin man. So, you know, I think that in itself is extremely interesting, just considering what's happening with that. But ETH will have a triple halving, sending a transaction on Ethereum, basically the base fee is burnt and erased from the network, right? There'll be a minor tip, and also the new ETH that is being made by the blockchain, right? So positive annual ETH at the moment, which means that there's more than is needed. It's inflationary, right? So what makes this merge special? A free time halving is going to happen, which is a major reduction in the amount of ETH being made by the blockchain, cutting it half 3 times. So from 4%, right, to 2%, from 2% to 1%, from 1% to 0.5%.
I didn't know that was happening.
Yes, bro. The network demand will grow over time. So yeah, basically, I expect the network demand to grow over time, and the demand for Ethereum to grow over time, right? And on the supply side of things and the demand side of things. So this will give people more of a reason to hold Ethereum as an asset, and institutions will be holding large amounts of ETH and staking it on the network itself. So that's a little bit of that, right? So let's get into actually being a node and the rewards and extra things that you can get on top of being a node, right? From the Ethereum official website as well, I'm going to jump on that in a little bit. So running validators on the network, staking rewards can be high and they will hold lots of Ethereum. So yield bearing assets which appreciates over time. So basically the institutions, they want to have a yield, like they would want to have a yield bearing asset that appreciates over time. So imagine you get like a property and it has good cash flow, but it's depreciating in value heavily. You're not going to hold on to that for very long because it's not actually appreciating in value, and that cash flow isn't covering it. So what institutions are looking for is a yield bearing asset that appreciates over time. So 32 Ethereum is needed to be a node, as we know, we covered previously. If you guys have stayed with us,
it would have been 32 grand a while back.
Exactly that, right?
I don't know if any of these institutions have got 32 grand spare.
They might do it. So they want to hold something that appreciates over time, as I explained, right? So I'm going to go into the official website. This is quite interesting as well. So currently, I know these APRs will definitely change, and they are going to get insane, right? I know that the APR is going to get insane because there's going to be such a large influx, and there's going to be like the doors are going to be opened. There's going to be madness. There's going to be Ethereum news coming out, and you're just like, what just happened?
I feel now that BlackRock are involved,
yes,
you can quote me on this, I feel ETH's market cap will go to 1 trillion in the next 5 years.
There you go.
If Bitcoin's there now, ETH can do that in the next 5 years. I believe. But
bro, if Binance is trading 30 trillion in volume in a year consistently, that's happened over the course of a couple years. That's their normal average like volume traded. Bro.
I don't know if that was Binance individually or the entire crypto market, but either way,
bro, that was Binance.
Oh wow,
bro, that's more than the whole entire crypto market.
Yeah, pretty mad. Either way, I personally see ETH going to over the next 5 years. My buy zone right now. I'll quickly share my screen so people can see my buy zone. We're literally in my buy zone.
What you're sharing now. I can see.
So this yellow line, 1958, is my buy trigger. Like anywhere, technically from 1,318 was an okay buy for me, up to 2,400. But from there, I'm seeing this thing get into my sell point from there is 10K.
Yeah. That's normal.
Yeah.
Especially so basically, this merge is gonna be insane. So let's get a little bit further into it. So yeah, I was on this. So currently it's 4.1% APR. I've seen third-party platforms that do around about 12% APR. So yeah, but
115,000 validators.
Yeah, and this is the amount of ETH staked, and this is only going to increase, lads and ladettes.
Yeah,
it's only going to increase.
Guess who's going to help that? What company?
BlackRock.
Coinbase. Done.
BlackRock and Coinbase. Oh, sorry, I stopped sharing. Sorry, lads and ladettes. All right, I'm back. So I'm gonna press the play button as you said and see if it goes. You see, Mike?
Don't listen to me. I don't know what I'm talking about. There we go, guys. Keisha's just proved that I don't know what I'm talking about.
There's a lot more to do with this, which is also interesting, right? So not only it costs 32 ETH to stake, and you can have these rewards from the APR, but there's also additional rewards.
What?
So there will be more rewards from here that will be added to the network additionally. But from what I've seen, from the dev side of things, when you're in, you can see what I'm. I'm gonna show you guys a little something called MERG Boost. Yeah. So it's flash bots, which we'll have a little discussion about. But from what I've seen, there's around about 12% annually with third parties. So these are the current ways of getting rewards, right? So extractable yields, which is just your extractable yields, your APR, transaction fees, and the MEV boost. Yeah, and we'll get into the MEV boost in a sec, right? So let's do it. Why not, man? So let's check out this little GitHub MEV boost. All right. Cool. Allows validators in Ethereum proof of stake to request blocks from a network of builders. This project is part of Flashbot's research towards proposer builder separation for minimal extractable value, MEV, right? So MEV Boost can connect to relays that aggregate multiple builders. The builders prepare full blocks, optimizing for MEV extraction, right? And fair distribution of the rewards. The consensus layer client of the validator purposes. So the most profitable block received from MEV Boost. This is a booster for your Ethereum node. This will boost your rewards. This will increase your return. So all of the institutions are going to be using additional reward systems like MEV Boost to increase their rewards. Right?
So they're going to need to say to their clients, yeah, we'll give you 8% a year. Meanwhile, they're getting MEV Boost.
Yes, bro.
Sounds about right.
Yeah. So there's a lot of things that will happen. Now I'm gonna get a little bit into my personal opinion as well. So
whilst you're doing that, I'm just gonna tweet Coinbase and ask them if they got it.
Yeah, so Yeah, guys. So basically, I think personally, there's going to be a lot of value locked in Ethereum. I think that there's going to be a new floor. Obviously, there's going to be a new floor price for Ethereum. And I think that the days of ETH being anywhere near 1K are over, bro. It's out the window,
It's
no
gone. It's
longer
gone.
happening. Maybe even 2K out the window, no longer happening. You're not going to see that happening because all of the institutions, and if you're smart and you're utilizing these technologies, are going to be utilizing this staking platform for many things. We have to take into consideration that Ethereum is the largest platform for apps to be developed on in the whole of this space. Majority of apps are built on Ethereum. Ethereum has multiple use cases, right? And it's only growing. The user base is growing. Everything is growing. I think that this is going to be an incredible time for people that are early in this, in my opinion. And I think that it's going to be really interesting to see what happens when the institutions start dipping their toes in this, because there's a lot of trillions out there that they have access to, and it's nowhere near enough trillions in the market compared to what these institutions are doing. Less than 10% exposure, 2% exposure. So, you know, yeah, on average about 2% exposure, maximum exposure I've seen from people like Kevin O'Leary, 7% exposure from 2% increasing. I believe that there's going to be a lot that comes into play with things like this, and ETH 2.0 is very important. I don't believe that the date will be exactly on September the 19th. Reason being is because they've pushed back that date a million gazillion times. There's a lot of different things that are happening behind the scenes with development groups and teams, and there's a lot of issues that Ethereum will have to actively face as well in order to keep this efficient and sort of that well-oiled machine that everyone wants it to be. But this is going to be a really pivotal time in space, and I think that yeah, this merger, it's going to be an incredible opportunity for people to become nodes and validators and create incredible returns from supporting the network. But it is an active role. Like Ethereum's cutthroat. It's not like the normal proof of stake where they take a little bit of your rewards. If you fail to be a good validator on Ethereum, your whole 32 ETH gone. You ain't gonna see it anymore. 32 ETH disappeared. Poof. If you ain't gonna be a good validator,
do you
it's
reckon
not like
it
you're gonna
could
take
go down?
piece. What was that, bro?
Do you reckon it could go down?
ETH.
Yeah.
I mean, it really depends. So what happens typically with proof of stake when a validator, let's say they stop actually being active and stop actually validating, what typically happens is that there's somewhat of a grace period where the blockchain itself will then look into each transaction of the validator, and dependent on whether it has been validating enough valid transactions compared to the transactions that are not valid that it has been validating, the reward or whatever has been staked, and also the rewards will then be released and given to the user. But I think that if you're not being a good validator on Ethereum, sayonara, see you later. You're gone.
Do you reckon all this money in Chinese real estate and BlackRock getting into crypto might have a correlation?
Yeah, maybe it might just do, bro. There's a lot of things happening in the world, and a lot of changes happening with the way that the world is interacting and the way that the world is developing on a technological point of view. And there's only a small amount of countries that are really leading in tech.
Yeah, if America win this race with BlackRock, they've won.
Yeah, that's the only thing. BlackRock are basically World Economic Forum, basically the leaders of the world, basically the rule makers of the laws, basically the you know the ones. So I think that whatever they do and whatever they say goes. You know, I won't talk about the vid, but you know what happened with that with my guy, Mr. Klaus. So there's a lot of stuff. What they do say goes, and they've said a lot of wild stuff that I won't get into. I've done my Matrix Glasses episode. You'll find it on the YouTube somewhere. But yeah, I think yeah, it's an incredible opportunity. ETH 2.0 is incredible, and there's only going to be additional rewards. That's what I got to say. There's only going to be new things that people think of, developers, people in the space think of it. Think about this. Ethereum is literally just a group of devs like all across the world that have come together. That's all Ethereum is. And
so for me, from as soon as it hits over that price that I've marked in, or probably even from now, I'm gonna start dollar cost averaging into ETH.
Yes, 100%.
The whole reason we wasn't buying ETH before is because
ETH is the one, man.
But now I feel like it's not. I felt like the $2,000 price was too much. I still feel like 1,900 is a bit too much. I feel like
I can't lie, I remember watching it go from like a couple hundred all the way up to like 400 and something. Then
yeah, we were telling people to buy it at 300. I remember the first episode of Blockchain Sensei is us telling people to buy ETH at $300.
Yep.
Well, not telling, that's financial advice, but showing people we were buying it instead of buying a PlayStation.
Yeah, look, quite literally, man. That PS5 that came out, right?
Yep. But
yeah, I remember that. Yeah.
Let's
so yeah, man.
Some questions from people.
Oh yeah, definitely. Any questions, guys?
Let's start with man like Deco.
Am I still sharing screen or not?
What's good, King? What are you saying?
Yeah. I'm alright, man. I'm alright. Doing good.
Bless. Forward. Is there anything you're looking into in the crypto markets at the moment, in the stock market?
Not in particular, to be honest.
First.
Just deep in the knowledge.
You learn anything from today's episode?
A lot, man. Been a lot to take in, but got it.
Sick. That's what it's about, bro. Higher level thinking, bro. Thank you for tuning in. Do you have any questions?
No. Just big ups in it.
Love.
All right. Thank you, bro. Big up.
Let's go. Rosita.
Hi, good afternoon, everyone.
Hi,
no, it's just how you guys doing today?
Oh, good. Is there any interesting projects you're looking at the moment?
Oh, I'm still wrapped up with notes, to tell you the truth. I'm kind of disappointed with what's been happening with the DeFi market. And in terms of ETH 2.0, I'm really interested to see how far it goes. The potential price rise could, for me, big thing. I'm not crazy about proof stake at all. I've never been, because it's always about who has the most money in the market. It's a big winner. But that's how it's always been going. And I guess that's how it's always going to go. But I do believe that ETH is basically the train tracks that the majority of things that we work on right now is going to exist on. So if they're saying a word to the wise is sufficient, I think ETH, this is not financial advice, of course, I think ETH would definitely be something that we would all wish to hold in our portfolio. I mean, when you diversify, you should absolutely make sure you've got that in your portfolio. And I'm looking forward to hearing more about what you guys have to share.
Love. That's such a good point. When it comes to the big boys, like you Mark Cuban, you Mike Novogratz, I've never heard any of them say that they don't have any ETH.
Yeah.
Literally everybody has some in their portfolio.
Literally.
The only one that doesn't, or claims he doesn't, is Warren Buffett.
Indirectly he does. Indirectly.
Yeah, definitely.
He's Warren, indirectly he has everything.
Thank you, Rosia. Let's go to Sori.
No problem.
Yo, yo, yo. So
What's
sorry,
good, King?
tapping in.
What's good? What's good? What's good?
Usual. So I ended up chiming in a little bit late on this one. So definitely gonna have to catch a replay. But I'm happy I did catch what was being said
Key.
for the last part. What's happening with ETH growing? I mean, when I saw the merger, when I heard about it, two things. One, I was like, okay, well, this makes sense because no way Coinbase really would have gone down the hill. They had to have something up their sleeves. Either someone pulled a quick, hey, yo, we can't let the ship go down, or it was a situation where this was always part of the plan, but they might have kept it on the hush because, you know, these big boys, they play and they play hard. So it was just interesting to see this play out. But now there's no way this stuff is non-institutionalized, as you guys have always been saying.
There is no way this stuff is disappearing now.
Yeah, it's not disappearing.
Which there's also now no way that this stuff is decentralized. Number two,
yeah,
and there's
no way,
no way in hell that Coinbase is going to zero now. Like,
absolutely not. No. This is going to be part of the fabric of Web3
life.
And tech and everything going forward. Life, generally everything.
Quite literally, 100%.
So it's going to be interesting to see how it goes, but you know, we're just going to have to find a way to continue to make it work for us in whatever ways that can be, and try to not get snatched by the little trappings that they'll have most likely here and there.
Yeah. There's no way this is going to be plain sailing.
Nope.
No way. There is no way that.
Oh no, there's always traps.
Yeah, there is no way that. Like, for me, the thing that I've been thinking is, if this is so good right now, the price is too accessible. So either it's going to spike up ridiculously, just like overnight, bam, so that it prices everybody out, or it's going to figure out as an institution which one would benefit, like which one's better. You know what I mean?
Yeah.
Obviously,
definitely.
If it dumps, then it's great because you can accumulate more. But if it spikes and you just price everybody standardly, you've then just dominated the market because no one else has got the funds like you to get the nodes.
Yeah, but also as you are a node, you have ETH locked in as a state, and that basically means that you have ETH that's going up as well.
True. It's interesting times. Thank you for that, though. So sorry.
No problem.
Did you have a question? Sorry.
No. It was just accepting and observing the information.
Nice. Love for that,
Thank
bro.
you, bro. Appreciate you, man.
And last but not least, Mr. Devon.
What's going on? I kind of had a question. It's more like kind of like your guys' thoughts. I seen someone in the WhatsApp chat mention it about Gala Films. I kind of wanted to hear what you guys had to say about the fundamentals and like how they compete against like competitors.
So when everyone was on this node thing and everyone was on the strong nodes and the all of this stuff, right? I was telling people, look, these nodes don't have any tangible asset or anything that an institution would want to buy. Gala did, and I was telling people, look, if you've got the money to buy a node, you might want to look at a Gala node. Them Gala music nodes, as you saw in the group, someone listened, and that's now worth 10x more than it was, even in this bear market.
Yeah.
The nodes that everyone was chasing around with, they've dumped, like I said. Whereas now the new set of Gala nodes have come out, and like I was saying, like the principles of investing is revenue and margins. Without revenue, you can't make profit. Without margins, you can't make profit from your revenue. And the thing that can increase your margins and that can increase your revenue is partnerships. And Gala are hunting down the partnerships, and Gala are just positioning themselves in a way that no one else is. They're positioning themselves to just come in and just be not just a creator, but a controller of entertainment in general, like whether it's gaming, music, or film. And guess what? All three of those things in this world that we live in now go together. Music goes in film, music goes in gaming, gaming can get turned into films, films can get turned into games. It's just a very logical play. Like, if you are anybody with any kind of like space in the media or entertainment, you're going to look at that and you're going to be interested. In my opinion, we're going to hear a big announcement from one of the big players about Gala, either Netflix or Disney, one of them, or Amazon. Most likely Amazon are going to make a move because it's too lucrative. Like, there is too much money to be made. Like, in the film space, like music, yeah, it's good, but in the film space, you've got to think all these films, that the reason film quality has got crap over the last couple of years is because you have to go and get funding from a producer to go and make your film. You have to go and get someone to give you 100 mil to make your film, and then you've got to justify that budget. And most of the time, we're justifying that budget not with 100 million that they're spending on a good quality script or on good quality.
No, it's more. It's way more. Yeah. It's more like 500-600 mil minimum.
Yeah,
like that's like base now.
And they're spending it on, guess what? And most of that money gets spent on CGI for no reason. Absolutely no reason. Whereas what will happen now is films on Gala will have, slowly but surely, will have more success than these films with these 600 million pound budgets. Why? Because it will be people writing films. Because as an actor, the only way you get good films is from good scripts. And at the moment, script writers aren't being allowed to make the films that they want, because when it goes to the testing audience, the producers are like, no, we're taking this bit out, we're taking that bit out, because we need to sell this, we need to sell this, and we need to get this product placement in. When you allow creatives, and especially film writers, to be film writers, the content you will see that comes out is mind-blowing. And the one place in the world that allows writers to be writers is Asia. And we see that with their stuff. If you've seen Parasite, some of the best writing ever, some of the best script writing ever. You can't understand Korea, just reading the subtitles and understand what's going on. Incredible story. What's the other Netflix one? The Squid Games. Incredible script writing. Why are people so obsessed with anime? Because the script writing. The Western world, when it comes to script writing, the only thing that's had good script recently is probably Black Mirror.
I'm not gonna lie, the Squid Games took a lot of persuading to get out. I think it took like 15 years to get out.
Yep.
Excuse me. I have a question. So you guys are thinking that Gala is something, in you guys' opinion, that we should really follow intently?
Intently. Gala, I've been following Gala from, they were one of the first people to have an active play to earn game that was actually an enjoyable game. So we did an episode way back where Dominica played Townstar, and you could buy nodes, you could buy parts of the Townstar ecosystem. And yeah, just everything they do quite well. So yeah, I would highly recommend looking, not necessarily purchasing, but definitely researching and paying attention to what they're doing.
And what do you think about, well, in more of the DeFi space, within nodes?
Within nodes, again, I'm very bullish on the Gala nodes. I haven't got one myself, I'll be transparent, but people that I know that have invested in them have done very, very well. I would say do your research into it. But they are once you understand the fundamentals and what they can allow you to do and what the ecosystem is going to do, I think it'll be, you'll see what we're getting at. But we do intend on buying a Gala node. We intend on buying multiple Gala nodes through the company at a later point.
Okay, and Kish, I see you're wearing a Polygon shirt. What are you feeling? So, because I've been into full disclosure nodes. I'm one of those person that has strong, and I had a bunch of Thors and red light. I mean, I was really into nodes, and I must say it did us very, very well. I mean, it's like, I don't know if you said let it rain. I mean, it was raining with our nodes, literally it raining. I mean, and what the process that I used, I did a bit of, so I got my first couple of nodes. I did my first investment in buying the coins and getting the nodes, and it was doing so well that around every 11th day, I could compound it and buy more nodes. I mean, I had a whole bloody spreadsheet with the anticipation of how often I would buy nodes. I mean, let's just say I had no less than 20 nodes. Just to give you a little idea, I had no less than 20 nodes. So the things that the rewards which I was bringing in, it's like every 5 days, was ridiculous. And it was quite a blow with this whole thing with Celsius that happened. And, it was disappointing. But based on what Michael is saying, is that he wasn't feeling the DeFi space that much. And when you look at it, they're all, they're basically centralized, yeah. And what I don't like about them is that, they do require, which was a really gambling part in this whole DeFi space that I didn't like, is that you have to leave it on their platform, the exchanges. And that was sketchy because how many of us actually read these fine terms and conditions, so
it's very to be very careful, especially with the third-party companies that run nodes and you can run it with.
But Polygon, what do you think about Polygon? Do you think can it get its head out of the water?
I believe that they have a lot of really interesting use cases. So we've done a video covering Polygon of recent, and that basically we spoke about Polygon ID and the use cases of Polygon ID. I actually went to a Polygon event. I know a few people from Polygon, and they really are positioning themselves to be their technologies to be utilized throughout the whole of the internet, and I think that's very important. And they have incredible positioning, being the biggest zk rollup technology that is being used currently. So they have a few companies
partnerships.
Go ahead.
They have amazing. They've got some of the best partnerships on the planet.
And it's very low barrier to entry to be a node on Polygon. Literally just one Polygon. So
$1.
One Matic.
Yeah, I've got some as well. I go hard with these things. Only because I really believe in some of the use cases.
Love that.
The APY or APR is 12%.
Oh, Rosita, what we'd love to do is if you drop us an email at hello@blockchainsensei.com. We'd love to have a discussion with you about your Polygon nodes, because that's something we're researching at the moment for a project.
Okay.
If you've got
something, good.
That's something that
hello@blockchainsensei.com.
Yeah, I'm going to type it in the chat now. It's something that we haven't fully dived into. If you've got experience with Polygon nodes, that would be amazing to get your feedback and experience on it, because we're trying to figure out how easy it is for a regular customer.
I sent it out
to just to
get into it. Let me tell you, I think I don't know if some ladies like pedicures and manicures and shoes, but I would definitely be a jean girl, like a Levi's jeans girl any day. But when it came to the node, I think I went a bit overboard, let's say. but I really did like. I went a
I'm
bit
gonna jump out and
overboard.
jump back in, man.
No, no worries.
Yeah.
You could end up becoming our Polygon. You could end up becoming our node expert at Blockchain Sensei. So yeah, man, let's have that chat. We're gonna
Sounds
end
great.
the call here now anyway. But thank you everyone for joining this incredible episode and these amazing questions. Thank you very much, guys. We'll see you next week.
Take care, guys.
Bye bye bye.